Good morning, it's Greg with the Gregory Group. It's a new year and I'm excited to get started. I'm right outside a hotel here. We're about to do an economic outlook with a prominent Austin area economist. So I'll report back with what's going on and what the future holds for us. Talk to you soon. I'm back from the economic forecast and I've got pretty good news to report. I'm going to get a little bit into numbers and trends, those type of things. So if you're impatient or don't like that kind of stuff, I'm going to give you the summary right now. And also make sure you look below in the email. I'm going to put a link to the slide deck that Ted put out there today. So you can always look through those graphs and charts if you're so interested. Like I said, today it was with Ted Jones. He's a premier economist here in the Texas area. He does this forecast every single year. And when I looked back at what he told us when I look back at what he told us in 2018, he was pretty spot on his predictions on that year. So I think what he says here has some pretty good cred. First thing he talked about, jobs are everything. You know, when people have jobs, when we're creating more jobs, that's more people with money. They buy homes, and when there's more jobs created, that's more homes that people have to buy. Job acceleration, of course, we had the recession and it just accelerated through 2015 and really peaked there, and it slowed down a little bit. But in 2018, we've seen it pick right back up, and there's another acceleration of job growth going on. Ted said he sees no recession coming, which is, of course, good news. One of the big bellwethers he looks at is leisure and hospitality jobs. Now, those traditionally aren't, the highest paying jobs out there, like the tech jobs, those type of things. But it's a good predictor because it shows where people are spending money. If people have a little bit of extra money, they'll spend it on vacations and those type of things. Overall, that sector has seen a 1.89% job growth year over year, which is a really good sign. Also, around the country, we've seen a 3.2% wage growth year over year, and that's going faster than the pace of inflation right now, so people have more money. Unemployment, we're at a 48-year low, 3.9%. That's, it's about as low as it goes. Also, this last year, we've had some tax cuts. Because of those, about 90% of people are going to pay less taxes this year. That extra money, a lot of it goes right back into real estate. Existing home sales has gone down though, and really there's two reasons for that. Interest rates have gone up a little bit. Right now we're in kind of the low to mid fours, which is maybe 1% higher than where we were last year. Also, we've got rising prices, and as prices go up, at some point everyone can buy less house. Something that I thought was really interesting, the biggest segment of home buyers right now is actually millennials. So 13.6% of homes were bought by people between the age of 25 to 34. And really this age group hasn't even reached the prime home buying age yet. So you would expect to see that number is really going to get much bigger in the next couple years. In terms of Austin area job growth, we're actually at about double of what the country is showing. We've created 3.39% more jobs year over year, and we see it. We always get these headlines of this company is moving to Austin, that company. I mean, for example, I'm sure you saw maybe a month or two ago that Apple said they're going to build a new campus, and it's going to be thousands of new jobs in North Austin. Some of the biggest growth sectors in the region and in Austin, it might be surprising to you, but it's actually not tech. The biggest growth sector is oil and gas, and I think this is one of the first years that the U.S. has become a net exporter of oil and gas, and a big part of that is all the new technology and the way they're able to extract it from all these shale fields that are all over the country right now. In terms of interest rates, this is one of the biggest things that we're watching. I mentioned earlier that rising interest rates contributes to a lower affordability because, of course, the higher the interest rates are, the higher your mortgage payments are, and the less house you can afford. Ted predicted that by June we're going to be at a maybe 5.1 to 5.7% interest. That's about a percent and a half higher than we are right now, and it's significant. He did say that he's a little more aggressive in his forecast than other people, and we had a whole list of prominent people around the country. But around average, what people were saying is by June we're expecting to see a 5%, around a 5% interest rate. In terms of the commercial markets, this is also a big indicator of how our economy is doing. When businesses are buying, when businesses are renting space, that usually means a good thing. And the top 5 commercial markets right now, Austin, Nashville, Raleigh-Durham, Salt Lake City, San Francisco. I don't think it's any coincidence that these are all considered tech hubs where companies are moving and bringing people. One small thing to note is Austin right now actually has an oversupply of hotel rooms. So hotels is actually not the best. If you've kept any track of downtown, so many new hotels have gone up. So there's a lot of new units. Those are the biggest notes I have. Just know, look, in 2009, we're not really seeing any reason for a slowdown at all. We've got such a strong economy, and as long as jobs keep coming here to Austin and jobs just keep getting created, the real estate market is just going to keep going up. Hopefully slowly, but it's going to keep going. As always, reach out to me, Greg at GregoryGroupTX.com. You can give me a call. If you have any questions about anything real estate related, we love to help. Talk to you soon.